let me put, and just remember, we always target our last low. Higher high, higher low, higher high, higher low. Since we broke it, we always target this other low for TP. So this trade still has potential to get to this level. Understand? This trade still has potential to get to this level. But I had to hop out on this level because this is a 1:2 trade. I don't want to be in the trade for so long. I don't want a situation whereby we make a full retracement. You get me? This is like a pullback. I don't want to confuse you. I don't want to confuse you to an extent because you really need more short time to like get to understand this whole process. But basically, I'm trying to make you understand pure market structure because pure market structure is just higher high, higher low, higher high. We broke this last higher low, came back up to retest. This is our daily. Understand? So see, this is top-down analysis. So this before I took this trade, this has not happened. Big um this big candle hasn't happened when I took this trade because I took this trade yesterday. You get me? So I took this trade after I saw price came back down and we even saw this week. So daily time frame, man. Daily time frame, you need to understand the last day before the day you are is really, really important. That's this last candlestick is really, really important for your next trade on your daily time frame. But if you go to your H4, you see it a bit clearer. Understand? Go to your H4, you see it a bit clearer. So since this is the level we broke, this is the level we broke. This was the last higher low on our daily time frame, which is this level here. Understand? So since we broke this level, we know that okay, this whole this whole point here, this whole trend here, this whole trend here is a downtrend. That's this particular trend. You get me? Are you seeing it?
Yeah.
I want to know if you're understanding me. This particular trend here is is this particular trend. Are you seeing it? Understand? I don't know if you're getting me.
Yeah, I get.
So this particular trend is that particular trend there. So since we broke this level, we came back up to give us another leg higher. The reason I took this trade, I didn't just take a trade because I saw a break on my daily time frame. I took the trade because I scaled down to my lower time frame check check what's happening here at this level. So if we let's say now, since this is a retracement, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So now we came back to this next lower high again to retest because we did not break. Understand? We did not break this level. We did not break this level. Let me see this level. We did not break it.
Mm.
What we did, we came back to retest on this same level. Yeah, we came back to retest. Since we came back to retest, we saw this bearish engulfing this bullish candle. So that's the reason why I took this trade. So you need to understand your confluences need to align. Understand? Your confluences need to align. So imagine me going to my daily time frame knowing that we just broke a structure. That's daily time frame. We came back to our H4. Even the H4 even gave us a very, very clear perspective of the market that okay, we came back up to retest this level. So since we came back up to retest this level, it turned to double top. You get me? So I don't get like different confluences. The reason why I need to enter the trade. It's not like I actually know where the market is going. I don't know where the market is going. I'm just managing my risk. If this trade stop me out, I'm losing 1%. If it gets to my TP, which it got to my TP, I'm gaining 2% for this particular trade. So I don't know where the trade is going. I'm just following my technical analysis and my mechanical strategy that I'm using. That okay, this is what I'm repeating, and it's just very, very simple. Lower low, lower high, lower low, lower high, and now we are having that same double top here. So this is like a chart pattern. I use chart pattern, I use top-down analysis, and I use candlestick analysis just to get this trade. And getting this my exit, I used my next support. This is my next support. So this is my next support. Give me my TP. Then you have to understand that you need to know when to enter your trade and you need to know when to hop out of your trade. You get me? You need to know when to enter your trade and you need to know when to hop out of your trade. So these are just
I swear.
basically these are just basically
I
things.
feel like
Yeah,
everything they fuck me up with that.
it's the thing now is that
I dey always wait to make I hit TP before I leave the trade. But most
now
times after some time we just go back down.
now that's the thing. There's something called trade management. You get me? Now what I want you to do, Boogie, this is what I want you to do. Anytime you take a trade,
Yeah,
anytime you take a trade, make sure you know that this is the trade you're taking. Make sure you know, say you've already made your analysis, and as you take the trade, make sure you hold that trade till TP or you hold that trade till stop loss. Do you understand? Just make sure you hold it till stop loss
yeah,
and make sure you hold. Just take the trade and set and forget about anything. Just take the trade as long as you've already because if you've taken a trade as you take that trade, the next 5, 7, 8 candlestick will trick you, say, okay, this is not correct. But you saw something that was correct 7 candles ago. Every candlestick that opens
yeah,
makes you think irrationally. Understand? But you have to understand that you need to stick to what you've already analyzed before. That's the process. See, the thing is that what you need to understand that we don't know where this market is going. The only thing that we can control is our risk. Understand? The only thing that we can control is our risk. We can't control any other thing. You get?
yeah,
I'm controlling only my risk. I'm risking only 1%, only 1%, only 1%, only 1%. So if I'm making money, I'm making 2% or I'm making 3%. Basically, that's the only thing I want to do. That's the only thing I want to do every day, every day. Like it's trading is very, very boring. Trading are fucking boring shit. You get me? Like, how will I put it? Professionally, trading professionally is really, really boring. Understand? It's really, really boring. So that's just the process. Lower lows, lower high. Just understand your market structure. You see, say I'm not even using fundamental. I'm not even checking the news. You get me? I'm just using technical. Now, news is a
yeah,
different aspect again. If you want to add more confluence, you get me? Me, I already know how to add my confluence with my fundamentals. I don't need to go deep into fundamental, into knowing what Trump is saying, knowing what CPI, because all those news events, I don't even trade. I don't even care about news because this is probability based. Trading is probability based. News or no news, bro. Most people that trade with news are people that trade gold, people that trade Nasdaq, all those future pairs and stuff like that. But I trade currency pairs, so I don't even need much fundamentals right now. So I'm good with my technicals. You need to understand your technicals on aspects before you even start adding fundamentals. So more short time, it's what I can recommend for you. More short time, more of you taking live trades, more of you taking live trades. So that's basically right now I'm on CAD JPY sale. I closed out this trade today. This is another trade I took today, and I'm already on it right now. This is another trade I took today. I took a buy, but it was wrong. So I had to close out. I got stopped out. So now finally I now understand that okay, since this was the last higher low, this was the last lower high. Price market reacted at this zone. Since the market reacted at this zone, I followed up to buy, but we came back down. Why did we come back down? This was a fake breakout. Since this was a fake breakout, this bearish candle, this black bearish candle engulfed this bullish candle to the extreme. You get me? Engulfed it. So because of this, I had to take this trade. Understand? Because of this, I had to take a trade.
yeah,
On trend, engulf, fake breakouts. That's grabbing liquidity. Fake breakout is actually the market grabbing liquidity. So this is grabbing liquidity at this level, selling at this level to this level. So it's basically the same thing. So now I'm selling from this level to this level. You see, this was the last lower low. If I go to my if I go to my Eurusd, this was the last lower low. You can see it. You can see this is where I hopped out. It's basically the same concept. If I come here, it's basically the same concept. Sometimes just in a different time frame. Basically the same concept. Nothing extra, nothing adding, not just what's the hard part in trading is just your psychology, how you manage the trade when you are in the trade. That's trading basically. How you manage the trade when you are in the trade. Understand? That's basically it. So if you have any question, I just wanted to show you my trade today and get to explain to you the psychology when it comes to managing trade, because normally you need to have a trading plan. And yeah, trading plan is good, but you need more short time. You need to know what you're doing before you have your trading plan. Your trading plan might even be different from my own trading plan because your risk appetite might be different from my own risk appetite. You get me? What you're okay in risking might be different from what I am okay in risking. I might be okay risking $100, and you might be okay risking $200. You get me? Our risk appetite might be
Yeah,
different. I might be saying, okay, if price get to 1:2, I put my stop at break even. You might be saying, okay, your own trade management plan is you leave your trade until it gets to TP and until it gets to stop loss. So just pick one thing. Just actually pick one thing that, okay, this is what I'm actually doing. This is what I'm doing. Understand? You get to understand, before you get to understand your trading plan. You get me? So trading plan is just basically what you do before you enter the trade and what you do when you're inside the trade. And trading plan can also consist of your psychology during that period, because there are euphoric moments where you'll be happy, okay, you're hitting your TP, you're hitting your TP, then you go get into your head that, okay, I'm too good, then you start misbehaving. So that's another aspect of trading again. You get me? Like there are different milestones, there are different aspects that you need to understand because it's a psychological game. You get me?
yeah.
Psychological game. So yeah, that's basically how trading is. So if you have any question, just let me know.
So my question is not really a question, I just wanted to talk about it. So like I don't really see God, what should I call this? Setups, yeah. For these other currency pairs like USD, GBP USD, only gold.
See, do
I don't
not
I don't see my setup in like other currency pairs. I barely see that. I don't know why it be like that.
you need more short time. See, stay away from, as my students, you see, my stay away from gold. You never reach time for you to trade. Gold is too volatile for your level right now. It's too volatile, like very, very volatile, because the trade will move so fast that you will forget about risk management sometimes. Sometimes you forget when to even put stop loss or put. See GBP JPY, you cannot tell me that you're not seeing any, like say a day, like say I was on this like say I analyze this trade, I would have caught this sell. This is a very, very this is a very, very this is a very, very good setup. So if see see higher high, higher low, higher high, higher low, higher high. We broke this last higher low, high, lower high, low. We had double top here. From this double top, we came back down. Retest the double top, came back down again, came back up. You get me? So this is basically what's happening. So if I see something like this, and I can tell that, okay, at this level we've already broken this um higher this last higher low. So since we've broken this last higher low, price came back down, give us retracement, came back down again, give us double top at this level. I might be taking my trade at this double top at this level, this double top here, this side here. I might be taking a
What?
trade here. You get me? Or there are different ways of entry. There are different ways of entry. This is this is a pennant. You get me? You will recognize the chart pattern. Abi, you recognize the chart pattern.
Yeah, yeah,
So
yeah.
this is actually a chart pattern that you can actually use. Okay, this is what I'm saying. Price broke. Since price broke, price came back to retest, and I took my sell. So this is GBP JPY. So the thing is that it's not about you not seeing your setup. It's about you having more chart time so that you can see it. It's actually there. Now you know the see am. I don't know if you understand. You don't need to beat yourself. You don't need to beat yourself too much because this thing is with time. As long as you enjoy it, you don't need to do it because of you need it. You need the result right now. You need to do it because you are trying to learn, and the money will come later, 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 later. All those normally, but you just need to learn that okay, this is what I'm trying to do. This is what I'm looking for, and I trade and I go. Just trade and go. If you get too sucked in, if you get too sucked in, the market will control you. And basically, the thing is that you really don't want this market to disturb your psychology. The goal is to trade less, not trade more. Understand? But at your level, you need to look at the chart more so that you understand where these trades they go, where this market is going to. Me, I told you I trade only GBP JPY for almost 2 years. Only GBP JPY because I wanted to know. The pair was so slow, my bro. It was slow. I know that period. I know. See, but I followed it. I followed all the trend. I followed GPP JPY when GPP JPY was going up. I followed GPP JPY when GPY was coming down. You get me? All those times, all those news, everything. I was there, so I understood the chart from GPP JPY very, very clearly, so that I can actually trade other currency pairs. You get me? So that I can actually. This is, bro. It's just like, see now. I'm still learning. I've not mastered my psychology to that extent yet, but I'm still in a learning process. I'm still, as I dey go, I dey understand, so, okay, this is what I'm not supposed to do. Sometimes you still make those rookie mistakes. You will say, bro, I'm always making mistake. I'm always making mistake, bro. Those rookie mistakes are always there for you to make. But anytime you make those mistakes, just make sure you are protecting your capital because you must make mistake. Even the professional traders where they make thousands of dollars, they make those mistakes. But just make sure once you're making those mistakes, you're protecting your capital. You get me? So that's basically trading. Trading is you protecting your capital to know if you stay long enough to start making those profits if you have a working strategy. That's the thing, if you have a working strategy. But if you are doing this one, you're trading trend line, you're trading break and retest, you're trading breakout trading, you're trading this, you're trading that. If you add everything together, every style of trading gets their downtime. You get me? Someone trading only, someone trading only trend line. I know a girl, she's trading only trend line trading. Tory trades, if you know her, she's American, she's only trading trend line. Imagine only trend line, first touch, second touch, and third touch. And that's the only thing she trade, trend line. The trend that I taught you that we are adding it to our confluence. That's the only thing she trades.
Yeah,
Because
no jazz.
trading is probability. She understood that trading is probability. You don't need to add a lot of things. That's why I say some traders they will add this, they'll add mitigation, add blah blah blah. No, it's good in the ear, but trading is just repeating one thing over and over again. If they feel repeat their mitigation and all those things over and over again, it's good, but you don't need too much noise. You don't need too much noise. You just need what you need is what you know that you can replicate over and over again. It doesn't matter if it's only candlestick analysis you're only doing, you can still make money on trading. I swear, God. You get me? It's just you protecting your capital. Can you protect your capital? Can your psychology be there for you to guide you through the process?